Welcome to another IFRS video with RO Academy. Our topic today is on IAS 40 investment property. We shall look at key principles of classification of investment properties under IAS 40 and the challenges faced in applications of these principles for investment property accounting, as well as how an entity can navigate these challenges. Let's start with understanding what an investment property is. An investment property is an asset held for generating rental income or capital appreciation. Not all assets can qualify as investment properties. To classify an asset as an investment property, an entity needs to determine the type of asset and the purpose for which the asset is held. Only land and/or buildings can be categorized as investment properties. Further, these assets should be held for either generating rental income, for example, through renting out the building, or for capital appreciation. Classifying an asset as an investment property is not always straightforward. It requires significant judgment in classifying properties as investment properties or owner-occupied properties. Today, we are going to discuss some of the challenges that an entity can face when it comes to asset classification. Specifically, we'll explore these 4 key challenges. First up, we have assets that serve dual purposes. Determining how to classify these assets can be complex, as they may fulfill more than one functional role within the organization. Next, there are assets that are put to alternative temporary uses. In such cases, entities must decide how to classify these assets during the period of their temporary use, which can complicate reporting and accounting. Another challenge involves assets that are still under development. Classifying these assets correctly requires careful consideration of their intended purpose. Finally, we have assets that are leased out under various types of leases. The nature of the lease impacts on how the asset is accounted for in the financial statements. Let's look at each of these challenges and see how an entity can navigate each of them. Some properties are held both to earn rentals, capital appreciation, and also used internally for production or supply of goods or services or for administration. For example, Entity A owns a building. A portion of the building is used internally by Entity A as an office space. The remaining portion is leased out to external parties. To determine how to classify this building, an entity needs to establish the following. First, if it can sell or lease out, under finance lease, each of the portions separately. If this is possible, each portion is accounted for separately. The portion leased out is classified as an investment property, while the portion used internally as an office space is classified as an owner-occupied property under IAS 16, PPE. Secondly, the significance of the portion used internally for production or supply of goods or services or for administrative purposes. If it is insignificant, less than 5%, then the whole asset can be classified as an investment property. Although the definition of investment property explicitly includes properties held for generating rental income or capital appreciation, sometimes you find that a property has been rented out. However, this is just a temporary use, and the initial intent is to sell the property as part of normal business operations. Large properties may require considerable time to sell, and renting them in the interim serves primarily to mitigate cash outflows. In such cases, the fact that it is being rented out temporarily as the entity markets the property does not necessarily classify it as investment property. Such properties should be categorized as inventory. Determining how to classify property that is being constructed or developed for future use can be challenging. To do this, an entity needs to establish the intended use of the property. An asset can be developed for different uses. For example, a building can be developed for short-term selling in the ordinary course of business. This building should be classified and accounted for as inventory under IAS 2. Alternatively, a building can be developed for owner internal occupancy. This building should be classified and accounted for as owner-occupied property under IAS 16, PPE. A building can also be developed for the purpose of renting out and/or holding for capital appreciation. This building should be classified and accounted for as an investment property under IAS 40. Sometimes an entity may hold land with an undetermined future use. In this case, the land is regarded as being held for capital appreciation and therefore considered as an investment property under IAS 40. The classification of an asset as an investment property can be influenced significantly by the type of lease associated with it. Investment properties are typically defined as land or building held to earn rentals or for capital appreciation. An asset can either be leased out under operating lease or finance lease. Classification of a lease as an operating lease or finance lease is pegged on the assessment of whether the lease transfers substantially all risk and rewards of ownership to the lessee or not. Property leased out under operating lease qualifies to be an investment property, while property that is leased to another entity under a finance lease is not an investment property. Understanding the classification criteria for investment properties is essential for compliance with IAS 40. As we've outlined, entities must navigate challenges such as dual-purpose assets, accounting for properties put under temporary use, properties under development, and different lease types to ensure accurate reporting. By applying careful judgment and a thorough understanding of the underlying principles, entities can correctly classify their investment properties, ultimately reinforcing the integrity of their financial statements. Thank you for joining us in this exploration of IAS 40 and the significant considerations in classifying assets as investment properties. To learn more about measurement options available for investment properties, how to account for transfers and disposals of investment properties, kindly reach out to us at Arrow Academy for an in-depth training. Like and subscribe to our YouTube channel for more insightful content on financial accounting and reporting using IFRS. You can also follow us on our social media platforms for details on our upcoming events.